Welcome everybody to today's live session, and we're going to be talking about a topic that I think everybody loves, and that is basically having more wins than losses, right? I mean, who doesn't want to have more wins than losses? And so what a great opportunity for us to discuss that. And in the comments too, just let me know if you guys, how is your trading going? Up, down, sideways? Let me know. Also, I want to do something a little bit different too as well, that if you would like me to maybe go over your trades with you one-on-one and to kind of identify some areas that maybe you would having struggling with, and we could tweak them and fix them and get you back in the driver's seat, so to speak, let me know as well in the comments, and periodically I'm going to check these comments and then reach out to you guys and say let's go over, let's look at your trades, let's go over everything and kind of get you back into a good place. If you're already in a good place, great, let me know too. I'd love to talk with you about what you're doing there, what you've seen that's been successful for you. So either way, let me know, because we're all here, and the purpose of these lives, the purpose of Apiary Fund, the purpose of everything is to help you to become a better trader. And so that's what we hope to do, and that's what we hope to bring to you, is the tools, the resources, and the helpfully help you to develop the skill set that you can become a consistent trader. And I want to really hang on that word for a minute, consistency, right? Being a consistent trader. That means that you are winning more than you're losing. That every day you're making progress, right? And that you're not hitting it out of the park. You're not going for home runs. You're not like, woohoo, even though you may have those days, but more often than not, we just want to focus on consistency, being consistent in the market and bringing that skill set. Again, that word, I love that word, the skill set that you need to be a consistent trader. Before we get going on that, I kind of want to share my screen with you guys and talk a little bit about It's been an awesome ride. It's been an awesome experience. Sean, me, and a couple others traveled, and we drove all the way from Utah to Dallas, Texas. And in Dallas, Texas, we had some great barbecue. I mean, it was awesome, right? Texas is really, as you guys know, great barbecue. But we met up with Sean's sister, actually, and she took us to her favorite local barbecue place. And so we had some great barbecue in Dallas. But the best part was meeting a lady named Sharon. We did a Trader on the Street episode. And in Dallas, in the city of Dallas, we met this lady named Sharon. We did some teaching. We got up and we had we had a lot of people there. We spent one day there just teaching and hopefully bringing, like I said, a skill set to the people in Dallas that they can be more consistent. But my favorite part, or one of the best parts about being in Dallas, was that Sharon was able to make money and to walk away in one trading session with, like, I believe it was like $1,223 or something like that. It was $1,200 in one session, and so that was exciting for her to see that her trading had just flip that switch, if you will. And in that session that we were there, she walked away with that check, and that was awesome. But my favorite part of being in Dallas is that after that event was over, Sean invited everybody and anybody who ever wanted to, come back to the hotel, and we traded all night long. Basically, we started at 8 in the morning and we traded till probably about 10 at night. And so it was a full day of just trading and excitement, and it just truly an awesome experience. From Dallas, we actually traveled to New Orleans. And here's a little video I want to show you of what this was right outside our hotel room. And whoops, my bad. Let me get that video going. I go full screen on that. And this was right outside our hotel room, and so this is kind of just a quick time lapse of basically what we saw every single day. When we were there, some of you guys may recognize this as Mardi Gras. Yep, that's right. We were there during Mardi Gras last week, and it was, for me, never been there. It was a unique and awesome experience just to get to see how the city comes to life during the Mardi Gras event, and so that was just a quick time lapse of of basically what happens all day long for like 2, 3, 4, 5 days in Mardi Gras. It's just one big party, right? So it was a lot of fun to do that. But you know, obviously we saw, if you guys see, look at this picture, if you can find Waldo, then you win, right? Everybody was dressed up in a unique costume, which was, I didn't expect that, but I thought that was really awesome. It was like Halloween every day, but it was really crazy. But we had some great food. It was awesome. Loved the food in New Orleans. And we met a lady that actually works in New Orleans, lives in New Orleans, and she told us something that she said in the city of New Orleans, in the downtown city, the average worker there makes about $10 an hour. A good wage is about $15 an hour there. And so we sat down and we said, well, what if we could do that, a full day's worth of wages inside of an hour or one trading session? Well, honestly, this trading session only lasted about 20 minutes. And inside that 20 minutes, she was able to walk away with a check. And let me see, what was that check's amount? I'm not sure. But anyway, she was able to walk away with a check of over $1,000, and I was trying to zoom in on that, so I apologize. But over $1,000 in 20 minutes of trading, right? I mean, how awesome is that? She had never traded before. Guys, look forward to, you know, if you don't subscribe to a Trader on the Street YouTube channel, do so. We're going to be pushing that up sometime this week, so we're excited about watching about that. And so, guys, you know, obviously this trip was a lot of fun. We met a lot of really, really awesome people, and we taught them what it meant to be a profitable trader and to be a consistent trader at that, right? Diamond never traded before. Sharon, she had some previous experience, so it was fun to watch how she took the knowledge and turned it into a great trading session. And so that's the whole idea of Trader on the Street, is to set out the proof of concept that anybody can trade, right? You don't have to be a Harvard or a Yale graduate in order to be a successful trader. And so that, to us, is a lot. And now our next stop, actually, we're going to be in Portugal in 2 weeks. We're going to be in Portugal in 2 weeks, and then we're going to come back to the States, and we're going to be in Savannah, so get your calendar set for those of you guys who are in Savannah. We're going to be over in Savannah, and then we're going to come back and do one here local to us in Utah, and then we're going to be in California. So those are the kind of the next upcoming events. And so get your calendars ready, because we'd love to have you guys there, shake your hand, and hopefully help you guys become a consistent trader or consistently profitable trader, right? Some of you guys are like, I'm consistent already. I lose every day. Well, you know, we need to tweak something, and so you can turn that losing streak into some winning streak. So that was basically our trip. My least favorite part of the entire trip was this right here. Yes, that's me traveling back from New Orleans in the middle of nowhere, New Mexico. I got pulled over for speeding, so I wasn't going that fast. The speed limit was like 75, and I think I was doing 85. So yep, that was me. That was the worst part of the trip. Other than that, it was awesome. So now let's kind of dive into the meat of the conversation. How to increasing your average wins, right? Because I think, you know, as a trader, or consistently, particularly those who are going through Beeline and trying to get funded, that is a requirement, right? In order for you guys to trade our money, we just ask a couple of simple things. One is that you have more wins than losses, and that your average win is greater than your average loss. Basically, are you a profitable trader? Well, if the answer is no, what can we do to tweak that? If the answer is yes, maybe you can learn something that might help you to increase your average wins, or the average size of your wins, or maybe not size of your wins, but more wins, right? And so let's kind of dive into that really quick, and then I'm going to look at the comments. So I see that we have a lot of comments coming in, kicking in. I appreciate that. And I'll go through and answer you guys' questions. Post them in the comment sections, and I will get to them. But I want to go through this a little bit, because I want to make sure that I go through this material, and then I'll jump back to the questions, if you don't mind. So as I'm going through, post your questions, and then I'll scroll through the comments and find your questions, and we can go back to that. Okay, perfect. So All right, the first thing that you need to do in order to have more average wins than average losses, and this is rudimentary, this is probably the basic stuff that a lot of professional traders already know, but they tend not to tell you guys, and that is to know your levels, right? Knowing your levels, or what I call knowing where the market is going to make decisions, right? Knowing where the market, when and where the market has the highest probability of making decisions is going to know where to place your entries and your exits, right? And so if you don't have a comfortable knowledge of your levels, then how are you going to ever know where or when to get out in premium or optimal time frames or settings, right? And so, whether you're a scalper, which is short-term trader, whether you're a day trader or a lot position trader, you still need to know your levels, right? You just look at them on different time frames. And so, we tend to look a lot at the 1 minute and 5 minute time frames because that is when we only have an hour to teach you. That's usually what where you can see the most activity inside of those 1 or 5 minute time frames. But you can take everything we're talking about here and convert that into the larger time frames if you're a day trader or a swing trader or whatnot, right? So I wanted just to preface that because everything I'm going to talk about is probably going to be on the 1 minute time frame because that's how I trade. But again, you can just transition it to however you trade. So know your levels. So what is a level? Basically, a level is basically your support and resistance, your floors and ceilings. So as you trade, as the market goes up, it hits the ceiling, right? And when it hits that ceiling, it says, do I want to break through that ceiling or do I want to go back down and hit that floor? So as it goes down, it hits the floor. So that's basically your level, support and resistance. Now, sometimes this ceiling or sometimes this floor is made of concrete and it's just really, really difficult to break. And I'll show you that in a chart in a second, what I mean by that. And sometimes that ceiling could be like a hut, right? Just a leaf or a big banana leaf that's on that ceiling and it just kind of goes right through it, right? And so you need to recognize when is this ceiling harder to go through than is it concrete ceiling or is it a leaf ceiling, right? Using that kind of an example. So understanding that helps you to say, well, if it's a concrete ceiling, yeah, I definitely want to either set my take profits there or my stop losses right above it in case it does break through it. I need to get out of those trades, right? And so by knowing that concept, that one little thing of saying, I need to set my take profits before it breaks through or my stop losses after it breaks through is immediately going to reduce your losses and increase your wins. Because oftentimes, if we don't have our take profits below the ceiling, not above the ceiling, but below the ceiling, oftentimes it'll hit that ceiling and go the other way and just barely miss our take profits and be like, it came so close, but it didn't take me out, right? But understanding where to place your take profits and your stop losses is paramount to having more wins than losses or having your average win greater than your average loss. So that's a level. Basically, knowing your level, knowing your support and resistance. Okay, the next thing we need to look at is, are we in a trending market or a consolidating market? What is your bias? Meaning, is the market in a buy situation or a sell situation? Am I feeling like it's a buying or a selling? So you need to determine that. You need to know your levels. You need to determine, is the market in a trending market and what's my bias, right? Is it down or up, right? So the next thing is we need to look at time frames. Okay, like I was talking about earlier, ceilings could be concrete or leaf. Well, a 1 minute ceiling, here may be more of like a leaf, but when you have a 5, a 15, or even an hour that all align, that the ceilings all align at the same price, that then becomes more concrete, right? This 1 minute ceiling is like, well, I'm going to blow through that because it's a leaf, but I'm going to stop here because I got a 5 minute, a 15 minute, and maybe even a 1 hour all in the same area that's creating that ceiling. So I look at these different time frames to see if I can identify potential support and resistance areas that are similar across the time frames. And if I do, then I know that this is more of a solid time frame, right? And so, but the larger your time frames, the more concrete that floor is or that ceiling is, if that makes sense. So the more data that you can push into that ceiling or that floor, the more concrete it becomes. Hopefully that makes sense. If it doesn't, throw some comments out there and I'll explain that a little bit further, right? But this, honestly, I want to make sure that everybody understands this because this is the basic foundation of which strategies are born from which indicators. I lost the word. What indicators use? A lot of things look at this and give you that indication, you know, hey, and give you that indicator. And so as you're a trader, as you're looking for this, everything is kind of based upon where your levels are, and of course, you know, price and what dictates price. You know, obviously the number one mover is going to be your market, news and all that kind of stuff. But if you know that there's news coming up, or you're trading in an area where there's no news, this is your second most thing that you need to look for, is your floors, your ceilings, your support and resistance, your levels. Obviously, your trending, your time frames. Then we need to identify our entries and exits. As I talked earlier, you want to make sure that your take profits are below your ceilings if you're in a buy, and your stop losses are above those, are below those floors, right below those floors. Again, if you're in a buy, or if you're in a sell above those ceilings or whatever, right? Support and resistance. Okay. So the last thing we need to understand is market volatility. If the market is, you know, going like this, chances are it's not going to break through that ceiling. But if the market is, you know, trading pretty aggressively, those ceilings that you thought once were concrete could now turn into leaves, because the volatility has increased. And so it's got great momentum. And so you need to be cognizant of the momentum or the volatility that is happening or taking place during your trading session. Okay. So these are the basic fundamental things. Now let's kind of look at it on a chart. Okay, so if we know our levels, we can kind of see. Now again, this is just a 5-minute chart, a data. This is an older chart that I pulled from a while back, but the data is telling us right now that previous to where the price is at, or where the chart is at, it kind of went up and then it came back down. Okay, so now you kind of hit that floor, and you can see that there's a floor right here. So we can see that the last, you know, 5, 10, 15 minutes, 20 minutes, half an hour, the trend has been kind of in a downward trend. Okay, and it's come down and it hits support, or it hit that floor, right? So if you can see that that floor is right there. Now, would you say that that floor is a strong floor, a concrete floor, or a banana leaf floor, basically? Well, in order to really look at that, we'd need to probably look at, is the 15, the 30, the hour all at the same level? And if the answer is yes, then I would say that that's more of a concrete floor. But if you're trading the 5 and the 1 and scalping, you can still think that, hey, more than likely it's going to hit this floor and bounce, because volatility is not strong. So that right there you can identify as, this is a possible trade that I could play off the bounce, right? And so what I mean by that is, when it hits that floor, we could be getting into buys right here. So if we're looking, so if I'm looking at this, my bias would be to buy. And if I bought, I wanted to just reiterate that, hey, the floors and ceilings they're not drawn in a thin line, a pencil line. You want to draw them like a marker. It's an area, right? You can dip down below it and still, if it could break it, but then bounce back up like a false break. And so it's more of an area, and then you have confirmations, but we'll get into all that. So basically, when it hits that floor, I'm looking for it to bounce. And so I'm looking to buy off the bounce, right? So I could get into some early trades, which I do, and that's just part of my strategy, is getting into some light positions early, anticipating the bounce, and to capitalize on that movement if it does in fact bounce. But if it doesn't and it continues the trend, then I'm only taking a little bit of a loss, right? But these are my early trades. These are my test the market trades, and that's what I do. So I entered into some early trades, and I look, this is my first exit point right here, right? And I put my take profit below that ceiling, again, below the ceiling, so that the market is more likely to hit the take profit than above the ceiling, where it has to break it in order to hit my take profits. That is, if you can take away anything from today's live, take away that. Make sure that you have proper placement of your take profits below ceilings that are harder to pass through, okay? Another exit point right be there, and then a third exit point is there, because if the market does in fact bounce off of that and comes up into that last exit point, now we're in a position of maybe a trend reversal. And so when you look at this chart, you identify, okay, where's my entries, where's my exits, and where's my possible trend reversal, meaning that it's in a downward trend, but if it goes up, where's that area, right? This is that area that if it crosses through that box, it could potentially create an uptrend. But if it doesn't hit that box and it continues down, we're still in that downtrend. And so you just need to be cognizant and aware of where those trend reversals could and will happen, because if that does in fact happen to you and you're in the wrong position, you probably want to get out of your trades at that point. And knowing when to get out is equally as important as knowing when to get in. Okay? So just looking at the whole chart, you can see that it didn't quite break through on that trend reversal, and the momentum definitely shrunk, or volatility definitely shrunk towards the tail end. And so if we were trading this, we would have probably hit all 3 of our exit points. And for me, that's my strategy, that's my setup, is looking for my entries, my exits, and if it hits my exits, then I'm done trading for the day. Personally, I have a personal goal of, this is how I trade. How you trade, it's just up to you, but basically my goal is to hit 1%, and if I can do that, or an hour of trading a day, and then I'm done, right? Whichever comes first. And my favorite day of trading is when I hit 100, or when I hit 1% in like 20 minutes. I'm done. I don't swing for the fences. I don't go for 5, 6, 10%. I could if I probably sat down and traded all day long, but I don't want to do that. So my goal is just 1% a day, or an hour of trading, whichever comes first, okay? And that's just me, that's my personal. Whatever you guys do is up to you, but that's to me, that's success, right? And I love it if I can hit that 1% in 10 minutes. I'm done trading for the day, I shut it off, and I go along my daily routine, right? So I love that. So knowing your levels, what I would highly suggest that you guys do is after this, after watching this, open up a chart and place stop, support, and resistance all along that chart, because that's going to help. That's going to help you to identify where those levels are, and then it also will help you into the next thing we're going to talk about. So we just talked about knowing where your levels are. So now we know what our levels are. What do we do, right? How do we identify that, or how do we get more wins than losses? You knowing that where our levels are. Okay, so let me see here. I think I got a duplicate slide in there. Well, that's awesome.
What's that?
My desk wants to tell me it's going to get lower. All right, so well, the first thing that I do is I want to break up the trades, okay? So if I'm trading with a full lot size, so if I got one full lot size, that is my personal, I only want to trade with one lot size, because that's how much I want to trade with. So I could break that into 10 or 20 trades by trading with a 0.10 or 0.50. Personally, I like to trade with a 0.50, or excuse me, 0.05. Let me break that up. 0.05, because I like the 20 trades, okay? So I break up my one full lot trade into multiple trades. However many that you can manage, still break that up. If you're going to trade with the one amount, break that amount up, right? And to have more trades that you can place, okay? And then here's a couple do's and don'ts, right? Never ever risk more in one day that you can't make up in 2. Okay, again, never risk more in one day that you personally cannot make up more than 2. So if you know that you can make 1%, like me, I can usually do that day in and day out. Then if I lose 2%, I'm done. Right? So that's easy. So know what kind of percentage that you can make, and that's pretty easy for you to do, and never risk more than twice that. Because what you don't want to get into is a situation where you have Monday through Thursday are great trading days and you're up, and then Friday you wipe out all those efforts. Man, is that discouraging, right? Have you ever been there where you've had great Monday, Tuesday, Wednesday, Thursday, and they're awesome, you're gonna have a great trading day, and then Friday comes along and you lose everything you've just worked for? Well, guys, that's happened to me, and I don't want it to happen to you. If it has, don't let it happen again by simply stopping out at a 2-day loss, right? Because you know that you can make that up. So you're like, yeah, I had a bad day, but it's not something that I can't handle. What's bad is when you get a bad day and you're like, I don't know, it's going to take me a month to recover, right? We don't want to be in those type of situations. And so never risk more in one day that you can't make up in 2. Just good advice. Always keep a reserve to help you trade the bad trades. So if you're trading with one lot size, but you can trade with 2, And so you only want to trade with 50% of your position, of your total position size, so that you can keep your other position size in case you need to help with some recovery trades, or you see an awesome setup and you want to get in a little bit heavier because you've seen this before and the probability of success on that trade setup is really high. And so you can put a little bit more on to, again, help you get more wins than losses. Trading those high probability setups are a great way to help you to get more wins than losses. But always, always manage it so you have some trading reserve, right? So to help you when you need help, or to take advantage of opportunities when you see those. Because I guarantee that during a trading session of an hour or longer, you're going to see opportunities that you've witnessed or you've seen in the past. You're like, oh, I'd love to take advantage of that, but I can't because I'm out of trading volume, or whatever the case may be. Don't get in that position, right? So, okay. Then now that we know what our levels are, we need to define our zones, okay? And our zones are basically when we know, when the market is telling us that, hey, you're doing a great job, or the market is telling us something's wrong here, and we probably need to identify some potential strategies to help us eliminate some of our bad trades, okay? So defining your zones. What I do is I take a chart like this, and before I ever started trading, and when I started learning this, I would draw my charts, and I would draw my levels, you know, all the way from top to bottom of that chart that I was trading on, and then I would break them up into zones, okay? So zone 1 is wherever price is at currently. So that's easy. Zone 1 is, again, wherever price is at currently is zone 1. Okay, or zone 0, I would say. Then I go 3 levels above price, if there is, right? And what I mean by if there is, if there's enough data above it. And I go 3 levels below price, 1, 2, 3. And those are my zones, okay? This is how I personally do it, it's helped me tremendously to reduce my losses and have my average wins, or more wins than losses, and all that fun stuff. Okay, so again, price, zones 1 or zone 0, I guess you might say, is wherever price is at. Then I go 3 above, 3 below price. And then I determine my bias. Am I buying? Am I buying or am I selling? Well, in this example that I'm going to share with you, we're going to buy, okay? So zone 1, again, where price is at. Zone 2 is my bias, so if it goes into zone 2, I'm in profit. So that's why it's green. Zone 3, I'm in more profit, right? Okay, and then on the other side, zone 2, I'm losing. And it's okay, I'm not losing a whole ton, but I'm still losing. I'm in zone 2. Now zone 3, now here's where if you have trades on in zone 1, and they hit zone 3, well, those trades, remember we broke them up, so we may have like 2 or 3 0.05 trades on. Well, those trades are now, the probability of working those out have become lower, right? So the probability of turning a profit on those trades, if they hit zone 3, is probably not high. And so what you want to do immediately is you want to take your take profit and move that to the floor of zone 1, okay, the floor of zone 1, because it's more likely, or right below, so your take profit, here's the floor of zone 1, you want to move your take profits right below that floor, again, below it, so that if it comes up, you're losing down here, comes up and takes you out, you're still losing, but you're losing this much as opposed to this much, okay? And that's paramount to managing your losses, okay? Now, what the cool thing is that if it does go down to zone 3, you can buy down here in the red 3, and you can put 4 trades on the red 3, and if it comes up and takes you out of the zone of the trades in zone 1, well, you made money on zone 3 trades, and you lost on zone 1, but the money you made more than made up for the money that you lost, right? Hopefully that concept, that makes sense to you guys. Like, that's the beautiful part about splitting up your trades, right? Being able to put multiple trades on, because you're never going to call the market right 100%. It's not gonna happen. And so by breaking up your trades into different zones, what an awesome opportunity they have to be A, more consistent, and B, having more wins than losses. And that is the key to managing your losses, to knowing, uh-oh, I'm in a bad situation here, I need to get out of it, or mitigate those trades, right? But you can mitigate it two ways. You can put new trades on that are in buys and going that direction, or you can just simply move your stop loss to a below the floor. And so it's more likely to hit that. Now, if it keeps going down into zone 4, 5, 6, you just simply move your stop loss down to zone 2 floor, zone 3 floor. Eventually, it's going to come up and hit that, and it's better to take a 5 pip loss than a 20 pip loss, right? And so eventually it's going to go. Now we're talking in a world of probabilities, right? The market doesn't trade in a V pattern. I mean, sometimes it does. And if you get caught in those, that's what your stop losses are for. When the market just shoots down 50 or 30 or 50 pips out of nowhere, well, that's what your stop losses are for, is to help with those ejector seat. It's going to happen, but more often than not, if you do this, you'll end up having more wins than losses, and your average win will be greater than your average loss, because you're managing your losses just like you're managing your wins, right? We always, I think a lot of times as traders, we focus on how to manage our wins, but we kind of forget about how to manage losses because we don't want to take losses. And so because inherently as humans, we don't want to take losses, we don't study how to manage our losses because we don't want to take losses. And so by having a systematic approach to, this is a loss, this trade's now a loss, this trade's now a loss, understanding that, it takes the emotion out of taking that loss because it's your system, it's your strategy, it's what you're supposed to do. And by doing that, it's going to help you to become a much better trader. Guys, I hope this makes a lot of sense. The last point that I want to make out or say to you guys is that when trading this, you need to be cognizant, if you're trading floors and ceilings, you need to be cognizant of where these points are, okay? And these points right here. Anytime you see these points, if you're in a buying situation, anytime the price crosses over these points or breaks through these floors in a buying example, then what we are in is called an outside range, okay? And you need to understand that that is an outside range, and I'm going to do a live on identifying an outside range, but if you know that it's an outside range, then you don't trade it, right? Basically, this is your major, the very top arrow and the very bottom arrow are your major floors and your major ceilings. If it crosses through that, I don't trade it. Personally, I don't trade outside ranges because I need the data to tell me where is the market most likely going to stop or turn. And if I don't have that, it's difficult for me to trade. Now, other traders who are position traders and long-term traders may not look at the 5-minute chart for that, but they can still look at the day chart or even the month chart, that if it breaks through and you're trading an outside zone range, definitely that's where you want to place your stop losses. For me, that's where I just am like, I'm not going to trade this. I'm going to go look for something else to trade, okay? Last thing too, this is the last thing I want to talk about, and then I'll get into questions, is I love this quote, that practice does not make perfect, only perfect practice makes perfect. Guys, what I mean by that is that if you're practicing something the wrong way, it's not going to help you. So take what I've just talked about, practice it, put it in a sandbox account, a demo account, whatever, practice it, draw on your charts, make sure you're practicing the correct way, and I guarantee you, I'm not going to say guarantee, but let me take that. But I believe, and I strongly suggest that you do that because it will make you a better trader, right? It can only help. So that being said, I'm going to turn my attention to some of the comments, some of the questions that we have, and then we can dive back into it. Okay. Let me just start at the top. And if I answered it, great. Hopefully you guys have, hopefully there's some nuggets in there for you guys. Okay. All right. Hopefully Matt and Hazel, those of you guys who are struggling, you guys will be able to take this and put it into your pre-fund accounts and utilize that as, you know, getting out of your trades or identifying potential areas to get out of your trades. Okay. A lot of comments, great comments. I love your comments as I'm getting better. So got some people. Hey Sharon, I talked about you. I'm glad to see you're on. That's awesome. I appreciate it. Bronze 3 is kicking my behind. I'm going through. Guys, if you have questions, maybe just post them down at the bottom and I'll get to them. So let's see. How do I place lines on my chart if I want to be able to move them later? Okay, great question. Let me get out of here and let me jump over to Alview. Okay, so placing lines on your chart is just chart objects, drawing tools, and I will use this horizontal line. And one of the things that if you don't have, go in your settings and make sure that you have enabled continuous chart drawing on clicked. Okay, that's just what I do. It makes it easier. So I take that line tool and I say, okay, here's a level, here's a level, or excuse me, floor and ceilings. There's one, and then there's one as well. So I'll draw on my charts, right? And then now that I've done that, I can say there's my zones or my levels basically, and then I know that this is my major and that's my major if I'm trading on the 1 minute chart on this pair. Okay, so continuous chart objects will help you to do that. Hopefully that makes sense. Okay, Brian asks, what's the best hour to trade? Well, the best hour to trade is when you have an hour to trade. It's simply put, right? Life can get in the way. Life can be obnoxious sometimes when you're trying to trade. But for me, I tend to trade in the morning, in the quiet hours of the morning before my household gets up and gets ready. For me, that's a good hour to trade. I love trading when the US and Euro sessions are open, but I often trade in the evening as well. You just have to have a different style and a different approach because volatility is not as great in the evening. And so, but for first and foremost, best hour to trade is the hour that you can trade, right? But I tend to see more activity during the Euro London session. So, excuse me, US Euro session. Okay, great question. How many orders do you put on a layer? Well, Richard, that is a great question, and I was going to talk about that, but that really is a gut feeling. So if you're trading a one full lot size and you see a great opportunity, so like a high probability trade setup, you stack more layers on. But remember in my example is like this is an early trade, and so whenever I get in and I don't see a high probability setup, but it's an early trade and I just want to get in, I will go in lighter, and then I'll wait for that confirmation that it is going in the direction I thought it was going to go. Then I'll probably stack more trades on. And so it kind of is a feeling towards what your strategy dictates. So what I'm teaching you here is more of a technique than a strategy. And so if you've aligned yourself with the strategy, so just to keep things simple, the Bollinger Bands, it hit the top band and now it should come back down. Well, maybe you can stack a few more on because you believe that it's a higher probable trade setup. And so, but by knowing that I have one full lot, I broke them up and I'm trading at 0.05, I have 20 trades. Well, getting in light might be 2, 3 trades, and then getting in heavy might be at 10 or 15 trades in that one zone, right? And so you are still at 50% of what you can trade or whatever the case may be. But that's the way that I trade, is I get in light, wait for that confirmation, then I stack a little bit heavier on that confirmation. And if I get a pullback off that confirmation, even better. Again, I often look for abnormal candles, and that was in a previous episode that we talked about abnormal candles, and I look for those and I trade those all the time, or I get in heavier because those are good high probability setups. Okay, all right, great question though. I didn't know that I could have taken a profit on some of my losses. Good. I'm glad that everybody learned something, or that you learned something here. Great. That's awesome. How many pips do I look for? FX Freedom says. Well, honestly, I look for between that floor and that ceiling. So again, my take profit is below that ceiling. However many pips are in that, I try to get, but it has to have at least a 2 pip profit before I'll even take that trade. Okay, so if it's 5 pips or 6 pips, but again, I'm only trading on the 1 minute chart. If you're looking at an hour chart, that between that floor and that ceiling, that may be 20 pips, right? And so it depends on if you're scalping or day trading. But as a scalper, I need at least 2 pips profit in order for me to have that be a zone, if you will. So there has to be at least 2 pips in order for me to create that zone. But that's a great question, really good question, and I should have put that in there, but I'm glad you asked that question. Okay. If I missed some of your questions, go ahead and throw that back in. I'm just looking now. Yeah, this is definitely recorded because it's on YouTube Live or Facebook as well, I think. So just scrolling down, just perusing the questions. Sean says in the morning he traded last night. Sure, he trades. You know, like I said, the evening trading just has a different feeling than the morning trade. You don't have a lot of volatility that you do in the mornings. What time and currency does Sean trade, Asian or London? So a lot of times during the London session, he'll trade the Euro US, which I do. And in the evening, he will look to trade either the Euro Yen or the USD Yen. So he'll trade one of the Yen pairs, whichever one seems to be his in line with the movement at that time. So great question. How do you apply this technique to a small account like a pre-fund account? That is even a great question, guys. If you're trading a small pre-fund account like $1,000 or whatever, you just basically do that. I think you trade with a 0.01, obviously, and you never trade more than, I think a pre-fund account, if I'm not mistaken, your maximum allotment of your trade is like 0.2. 0.25, maybe even 0.1. So you just trade the 0.01s, the micros, and you trade half of what your max position is. Guys, in those pre-fund accounts, it's not about making money, right? I mean, you're not going to make money. You're not going to pay off your house in those pre-fund accounts. It's just about the next 2 weeks. Can you do everything you've learned and stay above the waterline, right? Even if you're like 10 cents above the waterline, you're going to be moved into a normal account. So it's not about killing it in that pre-fund account. It's just being consistent, and that's why it's so paramount that maybe you use a technique like this in your trading, is so that you can be more consistent. You can have more wins than losses, right? And so basically, if you can do that in a $1,000 account, you can do it in a $2,000 account, you can do it in a $200,000 account, right? And so that's learning the principles, learning the skill set, again, back to that word, that's going to take you to become a consistent trader. So hopefully that makes sense. Okay. Just again, perusing the questions. How do you apply? Answered that. If anyone in Dallas wants to study with me, that's great. I love that you guys are partnering up. If there was a question that was towards the top that I missed, please repost it, and then I'll get to it down at the bottom. I just don't want to waste your guys' time by just looking for the questions. But for sure, you know, I love getting together and trading with you guys. So again, post in the comments if you guys how's your trading going, right? If you're going up, you're struggling, I'll reach out to you guys and just say, hey, I would love an opportunity to have you look at some of my trades and go over them. I'd love to do that. I know we've done that in the past and it was great. So if you guys need extra help, or even if you have something that you're like, hey, I found this and this is awesome, this is what I'm doing, I would love to kind of pick your brain and then maybe share that with everybody, because obviously there's more than one way to trade and everybody trades differently. Everybody's going to say, hey, I love this style, or you know what, that style is not for me. But if we can all share what makes us successful, guys, let's all take the journey together. Hopefully we can all become better traders and hit our individual goals. Guys, with that said, I really, really hope that you guys learned something today, take something out of this, are able to appreciate what we, basically the Apiary Fund and what we have to offer to you guys. If you do, I'd love a thumbs up. I'd love a subscription. I'd love you guys to hit that bell, that note, so that we can make this bigger, right? So we can bring this to more people. If that's not the case and you guys really, really don't like what I have to say, go ahead and hit that thumbs down, because then that tells me that I shouldn't be doing this. Anyways, I appreciate you guys' time. From that, we're going to go ahead and close it, and we'll look forward to talking with you next week, probably at our Income Wealth Bootcamp. So look forward to that. So thanks, guys, and we'll have a good week.